is Pete McGuire from XM. Pete, good to catch up with you on a Tuesday afternoon. Of course, we are awaiting that decision by the RBA. I guess it would be a bit of a shock if they did anything other than move by 25 basis points.
I think so, Andrew. It seems to be very much baked in, and we're just sitting here waiting for it to drop, and let's see what happens over the next matter of minutes. I think it's, 45 minutes to go or so. And, yeah, we just work through 10 consecutive, and how many more are there after this?
Well, with that expectation, where do you see the Aussie dollar going? Perhaps no significant movement today as a result?
Well, it's in that channel, Andrew. It's at 67.44 at the moment. It just doesn't seem to move much from that 67, 68 handle over the last week or so. So we might see a little bit of move to the upside if that does come in at 25, but I don't think it's going to be significant. And I look at the US dollar. The US dollar is very similar. It's a how's this for one? Asymmetric reaction function. In other words, good news, you get no result. And bad news, I think you'll certainly get a washout.
Yeah, there's no upside then, is there?
Nope.
Right,
No.
okay. But Pete, we look at the Aussie dollar. There was a bit of movement there, certainly post that announcement out of the People's Congress in China about that 5% growth target, which did disappoint on the downside there. And I guess it is still about the US dollar, and of course we'll have more on that as the week unfolds with testimony from Jerome Powell and also the non-farm payrolls at the end of the week.
Absolutely, Andrew. So it's a big week to go, and we're only just started when you're looking at it. So, yes, I'm thinking that non-farm payrolls, I'm not sure whether they'll boom to the upside like what we saw last month, but I think they're running at around about 216,000 as consensus. And then when you're looking at China, well, we're a proxy for that. And when you're thinking about what happened as far as the situation in China, they're going to re-engage and get their property sector very much under control, and certainly with the manufacturing side of it as well. So, yeah, we just sit here and see how the big engine of China moves forward. But one thing for sure, they're going to consume a lot more oil over the next year, Andrew.
Okay, well then on that basis, have we seen the bottom in oil?
I think we might have. I mean, I'm looking at it now. You're nearly at $81 a barrel for WTI, and you're approaching 87 a barrel for Brent. So that's not a good sign for consumer land anywhere. And then you're looking at the picture moving forward as far as demand and the Russia situation and all of those parts. So unfortunately, I think that the Vital and a couple of the other Goldman Sachs and so on are saying in the second half of the year, won't be surprised to see $100 crude, and maybe we're going to, move up to that point by then. So we're only a quarter and a bit away, and as far as timeline, and I think it's going to be a fairly tough second half of the year, Andrew, with energy prices.
Nonetheless, moreover with commodities, Pete, you're sounding fairly bullish, and is that based on China at this point?
I think so, Andrew, definitely. I mean, the market seems to be re-engaged. Base metals had a really nice move to the upside when China put to bed their COVID policy, and we saw that with copper and tin and a number of the base metals and iron ore. But since the start of the month, or start of February, I should say, they backed down a little bit. Gold had a nice move last week, up nearly 2.5%, 3%. So I think that the overall thoughts are stronger for consumption internally in China. They really want to get that engine moving and moving quickly. And as we know, they've got a wonderful engine to feed, and we feed them very well from Australia.
You mentioned gold, though. Is that remain restrained, certainly given what the US dollar is doing at the moment?
Well, it plays the yield story, Andrew, and we all understand that. So as yields move and you're going to see higher rates, the inflation story is one that'll fuel gold. I think its best days are ahead of it, and that'll be this year. Many analysts are saying, it's a 2,000 plus play, so we're pretty sure that it'll break that sometime this year. But the consumption, central bank appetite for gold globally is very strong, and certainly from the consumer globally, yes, very, very strong demand. China, India, and naturally the Middle East. So the giving of gifts, the wearing of gold jewellery and trinkets and that sort of thing, strong demand, Andrew.
Pete, let's round it out with what you're seeing in Japan at the moment with a change at the top, of course, with the Bank of Japan and what they're likely to do with policy.
Well, Governor Ueda, and when you're thinking about what will happen, well, the yen has been a wonderful demonstration as far as volatility since October. We've gone from 150 to 128 back to, at the moment, I've got around about a 136 read on it. I won't be surprised. You've had a nice move as far as wage growth, and we all understand that it's that time of the year in the spring season, negotiations between unions and employees or employers as far as wage growth. So that's going to be relatively strong. And the other side is, yes, inflation's ticking up, and we won't be surprised to see some form of adjustment to policy in the next matter of weeks. I think he starts the start of April, doesn't he? He's only about 3 weeks away.
Yep. Hey, Pete, good to check in with you as always. Thanks for joining us from XM.
Thank you, Andrew. Cheers.